So with the consumer price index and producer price index coming in cooler than expected, it looks like the Federal Reserve's fight against inflation might be working. However, we've got a whole new contender in the ring with the debt ceiling crisis. So where will the stock market head next week? The good news is inflation seems to be easing. However, the bad news is that every time the Republicans and the Democrats meet over the debt ceiling, there is no resolution. And with the deadline looming on June 1st, it looks like we could be heading into a volatile time for the market over the next couple of weeks. Next week, we also get key retailers reporting earnings, including Walmart and Home Depot. And although it sounds counterintuitive, the American consumer is responsible for the majority of the economy. So their earnings reports will tell us a lot about consumer sentiment. Speaking of sentiment, last week's survey of consumer sentiment came in lower than expected. So if the consumers pull back because they're worried about recession is exactly what's going to happen. So next week's reports from Walmart and Home Depot are incredibly important to see where the consumer stands right now. In the most recent episode of On the Tape, David Rosenberg of Rosenberg Research came out and said that he's seeing cracks in the labor market. In addition to increased jobless claims reports, he's also noticing that there's a decrease in what's called the work week. The work week measures how many hours employers keep workers working, and before they start firing people, they start cutting back on hours. And that's what Rosie's seeing right now. Rosenberg believes that we're headed into a recession, not just a mild one, but a real recession. And here's a key historic point that he points out. In the history of the stock market, it's never bottomed before a recession has started. In other words, not only does Rosie think we're going to test the lows from October, he doesn't think those lows are going to hold. And some bears have estimates of 3,000 on the S&P and much lower than that. So if you're a long-term investor like me, what is there to do about any of this? Well, it turns out the stock market doesn't need to be as complicated as analysts like to show. With all the money flow and the different kinds of indicators, it's actually much more simple than that. The market can only go two directions, up or down. If you're like me, you feel like you're always wrong. Whenever you buy a stock, it heads lower, and that means you shouldn't have bought then. Or whenever you buy a stock, it heads higher, which means you should have bought more. Conversely, when you're selling, when you take profits, if the stock heads higher, then you shouldn't have taken profits that soon. And if the stock heads lower after you take profits, you should have sold your entire position. My trick is that I am always wrong. I don't worry about that. No one's really going to get the top or the bottom. The importance is that you sell into strength and you buy into weakness. As long-term investors, we're in this for the long term. My time horizon is more than 20 years, and I know that many of my viewers have 30-year or longer time horizons. So when you're talking about a few weeks or months, that's insignificant in the lifespan of your investment. So instead of having a bullish or bearish narrative, just have a plan. What are you going to do if stocks sell off tomorrow? And what are you going to do if stocks go up tomorrow? If stocks don't sell off enough, I don't do anything. I don't add to any of my positions. However, if they do sell off enough to hit my price targets, I'll add to some of my positions. With no commissions, it's important to remember you don't need to add in huge quantities. So just go on the charts, find levels of support and resistance, and there you have your buying targets and your selling targets. You don't always have to buy at the next point of support or sell at the next point of resistance, but they give you guideposts so you can plan your entire investment. You should always plan your entire investment in advance. You should know exactly how much money you're willing to put into an investment and be prepared to either lose it entirely or know when it's time to get out. A lot of investors, when a stock is heading higher, will refuse to take profits even though they said that was the price they would because they think it feels like the stock's going to head higher. Conversely, when a stock's selling off, some investors will either not add because they think the stock's going to head lower or not take the loss because they think it's going to bounce. You need to dissuade yourself of these emotional impulses. If you make your plan in advance and stick to it, you will be more successful in the long term. To learn more, check out my website, getirk.com, which is always 100% free. Please hit like and subscribe, and I'll see you in the next video.